please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome. You're watching Business Lunch. I'm Nisha Podar and with me is Sonia Shenoy. Sonia, good afternoon.
Hi, good afternoon. It's been slightly downbeat for the market, right? Not looking too good. The week was good, but today there's been just a little bit of a subdued performance. So I guess holding on to the 10,500 mark, but some pressure there, Nisha.
Oh yes, some pressure coming in, but one can't really complain about the IT stocks. In fact, take a look at TCS, Tata Consultancy Services, after its results, closing in on $100 billion, the first company to have that kind of a market cap. And when was the last time TCS really saw a over 6% jump in a single trading day? So yes, kudos to that particular counter, and that's really taking with it the entire IT pack and not just the front line, but even the mid cap, Sonia.
Yes, but you know, it's interesting. Although IT is doing very well, stripped of IT, the market is actually under pressure, right? So you have Yes Bank, you have SBI, Reliance, Asian Paints, Bajaj Finserv. All these stocks are actually down anywhere between 1 to 3%. So I guess it's just IT that's keeping the flag flying high. But stripped of that, this market is a bit downbeat. But in markets around the globe, Asian indices have closed in the red, tracking the lower close on Wall Street and rising oil prices as well, which has stirred inflation fears and undermined the sovereign bonds. European markets too have opened lower, but now trade flat to positive. And all eyes will be on the Euro area consumer confidence data that comes out for the month of April.
Oh yes, so that was about the global markets, but let's shift focus to some of the macro cues coming in. And Rupee is at a 13-month low, and bonds also fall sharply on hawkish MPC comments. And Lata is right here to take us through all the details and give us the much needed perspective on this. Lata.
Well, first up, the rupee. This is a bit of a global trend as well. Globally, the dollar is now inching towards 90. It's actually almost there, 89, 90 plus. And that obviously meant all emerging market currencies are feeling a bit of the pressure. Those with high current account deficit feel the pressure even more. And in India, we had a bad trade deficit number for March, and that's only the fears are only getting compounded because all through April, crude has gone from strength to strength, which means the trade deficit is worse. You would want a higher capital flows to bridge the gap, and that's exactly when the FPIs are selling both bonds and equities. So how do you make the difference of a higher trade outflow and capital flows not coming in to bridge the gap? Obviously, the price of the dollar gets more expensive, and now the 13-month low of 66.08 was touched, at which point dealers said they noticed a lot of state-owned banks, PSU banks, selling dollars, and that usually is interpreted as on behalf of the Reserve Bank. But exporters also sold at that level. And therefore, we might see this pivot 66 being some kind of a support zone for the rupee. RBI is sitting with enough reserves, and therefore it will not allow panic reactions. It will allow only a slow deceleration or a fall, depreciation of the rupee. The bond markets has only bad news coming for it. The latest, of course, was the minutes of the Monetary Policy Committee. Until now, the impression was that only one member is hawkish, and in the monetary policy itself, the inflation target forecast of the RBI for the second half of the current year was lowered by 10 basis points, which the markets took as a dovish sign. But that's not what was crossing the MPC members' mind. They were feeling very hawkish, although the inflation number had been lowered. The comments indicated that while one RBI member is already voting for a hike, another one is likely to go there very soon. Viral Acharya is saying that he is about to move from a neutral stance to a withdrawal of accommodation stance, which is just a legal way of saying I want to hike rates. The other members, Chetan Ghate also sounded a bit, he's an external member, also sounded a bit hawkish. But then there have been other things as well. You know, crude is still rising. That is inflationary. Every time rupee becomes cheaper or dollar becomes expensive, imports are going to become expensive. That's also an inflationary trend. And in any case, there are hardly any buyers for bonds now. Foreigners are also selling. And the more you lose on the rupee, the more a foreigner will want to sell even bonds, because you make wafer thin margins. If the rupee takes it away, then foreigners would only want to sell dollars more. So there's nothing going right, except that at 7.8, one would think all the bad news is in the price. I mean, it's an attractive level to buy, provided someone buys.
Okay, all right, Lata. Thanks a lot for that. But moving on, the stock of the moment definitely is TCS. It's not just topped the charts today, but the company is now just inches away from becoming India's first $100 billion market cap company. TCS reports the best dollar revenue growth in the last 14 quarters, has beaten street estimates on most parameters as well. And the management outlook was quite strong too. So let's hear out what the management had to say on the growth trajectory. Listen in.
We are happy that we are on a double-digit trajectory. So we have broken into double-digit on a dollar terms. On the constant currency, it is still work in progress. Our focus, our determination, everything is to try and get to the double-digit mark on all parameters, whether it's constant currency or dollar denominated. But we'd rather wait for the next few quarters before we actually commit to that number. But we think that there is an opportunity out there. The other weak sector was retail. In retail, we actually have the deal wins, and the pipeline is also very strong. So we see much more direct visibility in retail, and we are quite confident that retail should be able to deliver a double digit in the year. And that's where the other underlying confidence is also coming. So we are now narrowed down to BFS. We see opportunity in the BFS side of it. We have restructured, we have got our teams set up properly for it. Retail, we see a fair amount of turnaround coming, with the more traditional retailers actually putting up a very good fight against the so-called e-commerce pure play plays, online giants. So we are seeing, and this is really our sweet spot, where we are actually helping them leverage the entire spectrum of technology and take their assets on the ground and repurpose it in a manner in which it is able to deliver a value to their clients which is beyond just price.
All right, TCS management speaking to Reema Tendulkar. Keep an eye out on Bank Nifty. That has dragged down further, inching towards a 1% fall. It's at the lowest point of the day, and dragging it down is also Yes Bank, which is at the lowest point of the day, as well as State Bank of India. But the biggest dragger for the Bank Nifty remains as ICICI Bank. So keep an eye out on the entire banking pack. But the overall markets are weak, except for the IT stocks. So all these banks at the lowest point of the day.
It's getting worse for the market now. So the mid-cap index is under quite a bit of pressure, actually, down to the low point. As you can see, there's that sudden slide in the last 5-10 minutes. And it's really the banks that are bearing the brunt of it. So I guess after IndusInd Bank's numbers that came out and the divergence over there, Yes Bank is now down almost about 3.5%. Don't know whether there's any kind of, nervousness getting into the numbers, but there's some money being taken off there. And PSU banks are just getting knocked down left, right and center. Bank of India, Canara Bank, Union Bank, all under pressure there. But moving on, the Fortis board is under fire from large FIIs gearing up for a transparent deal process. The Fortis board has gone ahead and constituted an independent advisory committee to consider all the binding bids on the 26th of April. TBG Manipal, Munjal Bermans are in the race, but now KKR-backed Radiant has also thrown its hat in the ring. Nisha, this is what, the fifth suitor coming on board, but I guess we'll get more clarity on the 26th.
Oh yes, 26th is when the board really will meet, and it will also take the advice coming in from the independent committee which has been constituted by the board. But remember that whatever this independent committee says is not mandatory on the board. So board really takes the decision, but that has to really pass the muster of the shareholders. And remember that board had come under fire from some large FIIs holding 12% stake in the company, and they had asked for dismantling the present board and reconstituting a new one, even giving names of some of the independent directors. So given all that, the board has asked for an independent advisory committee. Now remember that board has clearly stated that it's only going to be the binding bids which are going to be considered. So that rules out IHH and Fosun, which are global players and cannot do due diligence in such a short period of time, at least in our estimates. But what is on the table and eligible at this point is clearly one Manipal TPG deal, and on the other hand Burmans as well as Munjals, who really upgraded and revised their offer to a binding bid. Now remember that KKR backed Radiant is ready to give a higher price than all these bidders at 165 rupees per share, buying out the Fortis healthcare business for 10,000 crore rupees, and they're looking at a quick due diligence so that they can give a binding offer as well. But I would like to also take a look at Yes Bank, given all the other factors really being in play for Yes Bank. It is sliding today. I don't know if anything can be really related to Fortis transaction because they hold about 12-13% stake in Fortis Healthcare. Their acquisition price or the conversion price of the pledged shares was close to about 180 rupees per share, and none of the bids really coming in, Sonia, are really of that level as well. So let's see where this goes. In fact, I spoke to Brian Tempest, the director at Fortis Healthcare, on this entire development.
We have very clearly got a binding offer which came from Manipal, because that is the first deal, and that's the one, the contractual terms that we signed. And you will also be aware that we also have an offer that came from the Dabo Hero Honda family combined, and that had got associated with it no due diligence. So that is also a binding bid. So what we're saying is that whatever is the binding bids that are available with us on the 25th of April, when the advisory committee actually sits down, those are the ones that we will actually focus on, and the best one from there will be sent to us the next day on the 26th to the board meeting of Fortis Healthcare, and then it will go to the shareholders.
Well, Brian, the other names like IHH and Fosun are global big names. Do you not think that they should be given time for due diligence till 25th of April to really come up with a binding offer?
Actually, I think now is the time to focus the management of Fortis on the performance of making the hospitals more efficient and improving the results of the Fortis business. And I think now is the time to make sure that they're not distracted by financial issues or by these transaction issues, and we want to come to a conclusion. So the plan is, as we mentioned, we're going to focus on the binding bids which are there. We've now got some binding bids that have improved, so it's not only the original binding bid, but it's got an improved binding bid, and these are the ones that are actually going to be considered on the 25th by the advisory committee.
The shareholders have really questioned the legitimacy of the board, and they have also said that this board should be dismantled and new independent directors should be on the board of Fortis Healthcare. Given this scenario, how much do you think your decision will go down well and pass the muster of these shareholders? Well,
you know, Eastbridge is, as I mentioned, is a very valuable shareholder of Fortis. And as its shareholding is over 10%, then they clearly have the right to ask for an emergency extraordinary general meeting, and to put their case in front of the shareholders. But from our side, I mean, I believe that the board is actually acting in all the interests of the shareholders, the staff and the patients of Fortis Hospitals, and that we will be progressing to a good product, for a good end decision for the company. And whilst that particular shareholder with 10% wishes to express his point of view, I think that the greater community will actually see the benefit that our decisions are going to make for Fortis.
Okay, that one gets hotter and hotter, the deal that is. But let's move on and talk about some commodities. Aluminum and alumina prices have been on a tear this year. We spoke to TK Chand, the chairman and managing director at NALCO, to discuss the recent aluminum price rise and where he sees it headed. He said he could even double his EBITDA in the aluminum segment. Listen in.
Aluminum prices in past, it has gone 3,000 and above during the heydays of metal market, and now market is completely driven by shortage, because with sanction against Russia and some of the aluminum plants not producing to their capacity, now the market has gone into quite shortage. So we hope that prices will still continue. We are expecting that somewhere between 2,900 to 3,000 the prices will be there. For every $20 increase over the last year's realization in alumina, we get an additional EBITDA of 170 crores. And for every $40 increase in aluminum over the last year's realization, we get an additional EBITDA of 120 crores. So with this level of price, if we take $600 as the average price, which will be remaining for some time, and aluminum price I am taking around 2,550. So there will be a doubling of the EBITDA, and it will have a strong impact, because EBITDA will move somewhere to 40%.
Take a look at the markets and not looking good. In fact, has lost more momentum in the last few minutes of trading session. Mid caps is down 0.6%. Bank Nifty is the one which is almost 1% down at this moment. There are quite a few drags in the market when it comes to the ones which are really touching the lowest point of the day. India Bulls Housing Finance, L&T, ICICI Bank, GAIL, UPL, these are some of the counters, including also Bharti Airtel, which have really dropped in trade. So keep an eye out on that one. As far as advanced decline is concerned, take a look at that particular picture also, because that will give us more understanding on which way the markets are headed at this point. Bharti Airtel has perked up in the green just quickly in the 5 minutes, and there you go, advance versus decline, and that particular breadth has really widened in favor of the declines. Let's take it straight to the earnings previews, and earnings season, remember, has well and truly kicked off. Telecom companies will start reporting numbers from next week, with Bharti Airtel really opening the proceedings on Tuesday. And Reema Tendulkar is right here with what to expect and how will Reliance Jio really impact the landscape here. Reema.
The last 18 months have transformed the telecom sector. We're talking about the time since Reliance Jio launched its telecom operations. Since then, voice calling has become free. Reliance Jio was the first one to offer lifetime free calling. Earlier, the industry generated close to about 75% of its revenues on account of voice. On data, that's become the focal point of competition. India is now the highest mobile data user in the world. We consume close to 1 billion GB of data per month. It's not just the volumes which have shot up, prices of data have come down. In 2016, the price of 1 GB of data was 152 rupees. Now it's come down to 10 rupees per GB. This chart will show you that the prices of data have been coming down, but they saw a seminal fall in the last 18 months on account of Reliance Jio launch and because of the bundled offerings that it came out with. So from 375 rupees in 2013, we're now down to 10 rupees per GB. This is bad news for telecom companies. On account of these price offerings, the financial position of the telcos has been challenged. Bharti is likely to post its first quarterly loss in the last 15 years in the March quarter. That's next week. Idea has been reporting losses for the last 5 quarters, likely to do so even in the March quarter, according to estimates from Kotak Institutional Equities. All this means good news for consumers. According to an Institute for Competitiveness, the savings to the consumers would be to the tune of $10 billion. And on account of, there's so much data, India has now surpassed US in terms of app downloads, second only to China. It's quite likely this competition is going to continue because Reliance Jio's stated goal is they want to provide 20% more value to its consumers compared to competition. So every time the competition comes and matches Jio's offerings, they could cut it further, only weakening the market and the pricing power of the incumbents. They've also stated that they want to hit a market share of 50% from their current 20%. This means that 5G offtake may just take some more time. It took India 4 years to transition from 3G to 4G, but 5G may take some time because the infrastructure for 5G networks will require a lot of investment. COAI estimates that purely meeting the network requirements of the industry is about $10 billion per year for the next 5 or 6 years, and banks are unwilling to lend to incumbents who are already sitting on a massive amount of debt. So we'll see how the 5G story plays out and whether the spectrum finds any takers. But for now, the industry has gotten disrupted on account of Jio. We'll await the numbers from Bharti and Idea in the coming few days. Just one disclaimer, Reliance Jio is owned by Reliance Industries, the parent of Network 18 and TV18, which operate CNBC TV18, the channel that you're watching.
All right.